How do I buy shares of SpaceX? This might be one of the most popular questions that we get when it comes to private companies. This is certainly the private company that gets the most attention from retail investors. So consequently, we want to be very careful about investing in perceived exposure to SpaceX, which brings us to today's topic, DXYZ stock or Destiny Tech 100. It's an investment vehicle that offers some exposure to SpaceX, but it's something we would avoid at all costs given the current price. Why? Well, let's talk about that. So things we're going to do today. We're going to value DXYZ and set a price target as to where it should trade at. And we're going to show you how to do this yourself, right? Teach a man how to fish. We're going to look at other ways to get exposure to SpaceX that we've covered before in the past. We're going to look at valuations of some very exciting startups today. It's fascinating. Probably the most interesting thing about DXYZ is that it provides this information. And we're going to talk a little bit about Star Wars. So why do investors love SpaceX? Well, today's generation of kids wants to, when they were queried, except for Chinese kids, they still want to become astronauts and engineers. American kids want to become YouTube stars. So yesterday's generation, a common response to that was people wanted to be astronauts. That's because space is the final frontier. It's the last unexplored place. And Elon Musk, since he's running SpaceX, arguably the world's most successful entrepreneur, his aspirations with Starship are really crazy. So when you have the wealthiest man doing something very cool, it brings a certain allure to these investment potentials. And of course, Hollywood has helped a lot. So I'm not sure if anybody knows this, but Tatooine in Star Wars is actually modeled on a town in Tunisia. And you may not know where Tunisia is. Here's a map on the left. You can see the country of Tunisia marked there. It's just below Italy in the north of Africa. On the right, you can see where I've pointed out Tatooine. If you look north of that, you see a town called Sousse. That's where I'm at right now. So I hope to get to Tatooine on this trip. So why are we covering DXYZ? Well, most recently, Sir Jason of Calcutta was talking about it, and that brought a lot of attention to an asset that appears to be one of the most popular on StockTwits right now, which is certainly a problem. A viewer had raised this before about a possible stock that we could cover. And since we like to cover stocks that get heavy retail interest and stand to burn investors badly, we decided to give this one a shot. So you can see here in the media some very tantalizing headlines at the top. Want to invest in SpaceX or Stripe? There's a fund for that. And here you can see how this stock has risen 800% in just days. That's a big red flag, right? If you know anything about intrinsic value. And then you see here they mention this new fund that allows you to invest in startups like SpaceX and OpenAI, right? Very exciting. Let's talk about intrinsic value. So what's an asset worth? Well, for a house, you have what property appraisers will tell you that. For a car, you have the MSRP. For a stock, it's very simply the present value of future cash flows. DXYZ isn't a stock. It's a closed-end fund, which means the value of that fund is simply the collective value of the assets it contains. Now, what's that $10 bottle of water some Tunisian is peddling at Tatooine? Well, it might be worth $10 to you instead of the 50 cents that you could buy it at the store because you're not willing to wait. And that's what's happening here. You have DXYZ, a asset that's worth, with a premium, $5.32, that's being sold for $117. So how did we arrive at this $5.32 number? Well, we started with Edgar. So this is a database that you should be doing a lot of your due diligence within. And we pulled up the Destiny Tech 100 annual shareholder report as of the end of last year. So not too much has changed since then. But what you can see here is they're plotting their net asset value over time, and you can see that it's declined by 53%. What does this tell us? Well, it says that so far, the managers of this fund aren't doing a very good job. So they've invested a whole bunch of money, and it's declined a lot. And what you can see here is simply the basic financials for this fund, something called net asset value per share. That's very important to pay attention to. That's the total asset value of the fund divided by the number of shares. So $4.84. That was at the end of last year. Okay, Let's assign, let's say, a 10% premium to that, since there's some exciting companies in here, and we get to that $5.32. The reality is that for most funds of this type that have entirely invested in private companies, they actually trade at a discount to NAV. So we've observed that over the many years we've been covering this stuff. So this is not an IPO. It's a closed-end fund that's become publicly traded, and we've looked at a lot of these. As I said, they typically trade at a discount. This shouldn't be trading at $117 a share the last I looked. That's a 2,100% premium to NAV. I'm telling you this, social media stupidity is going to result in an unprecedented transfer of wealth from retail to institutional because so many people are being misled. That's why our brand is growing so fast, because we cut through all that BS. We saw this with SPACs and meme stocks. We warned across the board on those. This might be one of the most ludicrous overvaluations since VinFast. Now, who's behind this? Well, this very interesting article by Business Insider starts to go down this path. You can see that at least one of the gentlemen involved right now is a co-founder of Forge. We actually worked with Forge before in the past. Worked with them in terms of driving leads their way because they run a secondary market where investors can go to purchase shares of startups. They went public in a SPAC deal in 2022. I think that's down over 70% at least. Presumably, some of the money raised from that went into the founders' pockets, and perhaps that's around the time when they started buying some of these private companies. But they wanted to build on what they started at Forge and build an investment vehicle to allow retail investors to bet on private tech unicorns. That's what we have here. And they say, oh, the story of how things went off the rails diverges wildly. Okay, you can go down that path, but we're going to just mainly focus on what this fund holds. So you see here, taken from their website, 23 companies. The name Tech 100 implies they want to get to 100. So the SpaceX weighting in this fund of around 30% is going to decline, presumably as they add other companies. So the annual management fee of 2.5% is very, very high, but that's what happens, I suppose, when you're investing in a fund that trades in private companies. So how are they doing? You could see here the top 10 investments. Well, they invested $87 million, and as of the end of last year, they had about $52 million in assets. So they lost nearly 40% so far. It's not over until the fat lady sings, right? So let's look at the performance then of their top 10 largest investments that account for nearly 74% of the fund's assets. So if anything, this report is a great tool to look up how private market valuations for popular companies are changing over time, right? So let's look at the big one here. We have SpaceX and Relativity Space. DXYZ lost 13% in their investment in Relativity Space, but they gained 31% in SpaceX, so that's quite good. So what about the other 8 companies? Well, you can see those listed here. And one thing I would note is that investments made in 2021 were really at a peak bull market, so you can expect to see, in many cases, there a significant loss on those investments. But the one I wanted to point out here was OpenAI. They actually had a placeholder for this in their annual report, and as of January of this year, they invested about $2 million, not very much, in OpenAI, and you can see that represented here. So other honorable mentions, these are companies we've covered over the years. We've been doing this a long time. You can see here this piece we did back in summer of 2018 on Automation Anywhere. So they're a competitor to UiPath. DXYZ invested in them in late 2021. That investment's down 82%. Flexport, very interesting company. I thought that what they were doing was fascinating, transforming supply chains, right? Well, an investment in that firm wouldn't have done so well. At least if you invested in 2022, it's down 81%. Stripe, down 45%. So private investing, 9 out of 10 startups fail, right? So at various stages, the risk decreases as you have more and more traction. But what's evident is that there's a lot of volatility. And we've looked at ways that you can invest in startups for quite a while now. You can go to our website and search on the tag venture capital to find all these articles. One there at the top, a stock exchange for private companies. So that's what they call secondary exchanges. There's a number of them out there. Below there you see that article, Investing in SpaceX with Bailey Gifford U.S. Growth Trust. We happen to really like Bailey Gifford, but you wouldn't invest in that fund solely for the SpaceX exposure. But there's other ways, of course, to invest in SpaceX. You have secondary exchanges like Forge, right? But the problem there is that there's usually prohibitory minimums. They say you have to have 25K or 50K. And that's feasible for a lot of investors, but then you need to think about in the context of your larger portfolio. And let's say you only wanted to take a 5% bet of your total AUM, you need to have some pretty large AUM, right? So they're also limited by share availability. There may not be shares to buy. And often they'll bid up shares, right? So you have to pay a lot more than perhaps what the last institutional investors paid. There's funds offered by secondary exchanges like Forge or others that I've seen. Funds that hold SpaceX, as I said, Bailey Gifford. And of course, you can wait until SpaceX has an IPO. It may never have an IPO, but what you shouldn't do is have what we call YOLO FOMO behavior. And what we can do then is ask Chewy. So this is taken from an email. This was 15 years ago. I used to send emails. I was the head of client services for EMEA at MSCI. We were spun out of Morgan Stanley, and I often introduced our team to other teams in the region and had everybody's profile and a little description. And we always included Chewy because he worked on our desk. And whenever we'd have a client calling with some difficult question, we need to make a decision, we'd say, well, hey, Chewy, what do you think? We go, okay, the person can have data, right? So that was a joke on the desk, and it was a quite popular one. So we'd ask, what would Chewy do? Well, he certainly wouldn't invest in a company that's ridiculously overvalued, and he'd probably use this opportunity to learn how private companies and funds are valued based on intrinsic value. And he'd probably also subscribe to this channel and, of course, our free newsletter that we're going to link to in the comments section. Now, we have no Wookiee in the race here. So the types of stormtroopers we expect to see come around, the beginner level, we've covered this before, they'll scoff and dismiss the entire thesis as not worth their time. Or you have the intermediate level, they'll copy pasta their bull thesis diatribe. Or the advanced individual who actually watches the video and then finds one small inaccuracy to pounce on. Well, resistance is futile here because it's really black and white in terms of intrinsic value versus what the fund is trading at. Note that we never short any stock. That's because the irrationality on display out there knows no bounds. And you can save all the "this aged well" comments. We're not trying to call a top on this hyped up mess. We're simply saying that shares trading at a moderate premium to NAV would be acceptable, not at a 2,100% premium. That's ridiculous. So I'm going to go ahead and leave you with another video that you might find interesting. It's a company called Rocket Lab. It happens to be one of the few space stocks that we like, and they compete with SpaceX. So please make sure to subscribe to this channel. Thanks so much for taking the time to watch this today.